Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on March the 29th, 2022 with a Forex market analysis for you. Before we get into it, we want to remind you with our disclaimer that this webinar is for illustrative and educational purposes only. And before we get into it, we also want to remind you to subscribe to our YouTube channel or our Twitch channel, depending on whichever way you are viewing us, or both. And make sure you like and share them as well. We would appreciate that. And while you're at it, check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And that's also written by yours truly. So we have a lot to talk about today. Interesting stuff coming out from the Fed and a bunch of other things around the world. All right, so we have the Forex-Trading-Unlocked.com website pulled up already for you. And by the way, if you go to Products, Courses, Services, go down to High Probable Japanese Candlestick Patterns. That will give you all kinds of information in a video and access to chapters of the book. All right, so we have the Euro-US dollar chart pulled up. If you guys have been following our videos over the past week and a half, we've definitely been talking about whether or not the euro would subside or whether it would start to explode one way to the upside or the downside. Very interesting news that has come out into the forefront in the last 24 hours especially. So to give you a clue as to what's driving the Forex markets now, we have the Bank of Japan that may now start to get into the raising of rates race with the rest of the world. For those of you that don't pay attention to interest rates, you should, because all currencies are a function of their value is interest rates pricing, and also on the crossing between different crosses, that pricing between two different interest rates from around the globe. So the fact that the Japanese are finally getting into this, for those of you that are not aware of why that is significant, let me explain it to you. The Japanese are very tight on monetary policy. They don't just jump around and do things willy-nilly, and they've been very staunch on keeping rates low and staying where they're at. Now, of course, the dollar gaining on the yen over the past few months, especially in the fall, definitely helped ease our inflation cost against Japanese goods because the dollar was more valuable against the yen. So we were able to purchase stuff even in an inflationary environment at a relatively decent price, but that's for stuff coming out of Japan. However, the problem with that on their end is that you have goods that are no longer bringing in the value that they need to. So with their currency going down, yes, their exports go up. The only problem is that as their exports go up the amount of money that they're taking in for it is going down. So relatively speaking, this does not help them whatsoever. So it's very important to be mindful of this as we move forward talking about these different currencies. All right, so we're going to take a look here at how the euro-yen is taking shape here. As you can see today, it almost made a higher move high here. Now, we had this buy signal that occurred a couple weeks ago, beginning of March. This is a 3 inside up buy signal that had us targeting this area right here. We fell just shy of the 50% level, which is right around $1.1153. Today we came off a higher move low after a higher move high, and we are just below making a higher move high and pressing on into our target range. Now, does that mean if we get into this range that we have a bull market and we are going to continue higher? I mean, after all, higher move highs and higher move lows are indicative of a bullish trend, correct? But that is only in the short run. This is right now viewed as a corrective move because we have been trending lower on the long term and the intermediate term as well as the daily for a very long time. So right now this is an upside correction. That's why this area here for our target area is key. Now, should we get above $1.1232 and start to press on into this area, does that mean that I'm very bullish to euro-US dollar? Not necessarily. That just puts us into the range that we had been trading in for a long time with the euro-US dollar. So excuse me for the noise from the neighbors next door. I guess they started their construction again, which I thought they were supposed to be pausing for the next hour. So we'll have to have a conversation with them again. So especially with that. Anyhow, higher move highs are definitely on the agenda in the short run. This being because the Fed announced again that they are not only just raising rates over the next 7 meetings, but also now they are talking about raising at a half a point at a time. So a half a point at a time is definitely meaning that they agree that they probably are behind the curve, and they're not just behind the curve, they're way behind the curve. So this should have been all going up. Interest rates should have been going up already a while ago. Definitely last year already. It was already too late already late then. It should have been going up 4 or 5 years ago. Just because rates are being at zero, maybe nice to millennials who think that, oh, money is just free and you don't have to pay interest or anything. But why would you lend money and not have any interest to make? That means that any default, your default risk is just absorbent, and your ability to capture profits just falls through the floor and is nigh impossible. So that's a whole nother argument. But the thing is that as our rates go up, that strengthens the dollar. Now the stance with the Fed now being enhanced today and yesterday, after when Japan jumped into the ring, that helps to add fuel to the strength of the U.S. dollar. So I think that that's going to be restrictive of the euro unless the EU, the Bank of if the EU starts to change its policy between its countries and leans on their central bank, and then the European Union decides to raise rates aggressively, not to mention stop quantitative easing buying, which is something they need to do as well. So we know that we've already curbed our quantitative easing, which is the same thing as cutting rates, which that's huge. And you can tell by the Treasury bond market and the 10-year note market by the way they have been reacting. So that is something to watch. And if we look at the CME right now, you can see, let's see, the crude is down $1.20, which is huge for the currencies as we get into the ones that are impacted by the price of oil. And then we have the interest rate here. We had the 10-year that's down, was it 16.5? That's 16 ticks. Remember, futures go by ticks, not pips. Yeah, same difference, same thing, just they call them different. And the U.S. Treasury bonds are up they're up over a whole dollar. They're up $1.04, so that's 36 ticks on the day. This is a corrective bounce right now, and isn't it seem kind of odd that as we have all this talk that we're getting a rally? Well, it's profit taking. So that is giving weakness to the dollar in all the currencies, and that's why you see this big explosive move here with the euro and the dollar cross. Now we had this trend line that we were using. Now we'll use the low from yesterday, and this really puts us at a nice 45-degree slope. This helps to keep us try and butt up against resistance and get up into this area here. I do believe you're going to have a lot of resistance here. So let's take a look at the dollar index real quick, because the euro is the biggest weight in the dollar index. Now see how this is trending higher. It's coming off of having made this high back here. We found some support, and then we looked like we were winding a coil, and this market was the dollar was gonna retreat. Not so. Look at how yesterday, boom, we popped up. Now today, obviously the dollar is under pressure. It's falling just below this, and it's getting choppy, but it's still butting up against resistance. And the only thing that's really holding the dollar index back is when it's up or down, is when it's down versus the euro. This is something that's restraining the dollar index. The other currencies, there's a lot of division between which is strong versus the dollar and which is weak versus the dollar. So that means there's divergence in the currency cross structures across the board. All right, so go back to the euro real quick. And by the way, if you guys have any questions about the stuff we're talking about, please do not be shy. Leave a question on either Twitch or on YouTube, and we'll get to it as we get through this video. Just to see real quick, let's see, we got 1 like on YouTube, we got a couple of viewers. All right, hopefully you guys are sharing. We got a couple of viewers on Twitch too. All right, no questions. All right, so we shall continue on. All right, so what are we looking for as far as a downside? So if you're a bear right now, remember this isn't a bear market and it's in a corrective mode. I would look for a sell signal as we breach resistance. I would sell into strength right now. That's what I would look forward to. Only a failure right now from this low from yesterday confirms obviously bearishness. That would be indicative of setting up most likely a big wave down from this area, which is 109.5. I think that would precipitate a slide that I don't think it would happen in this session, but I think over the course of half a week to a week, you could see the euro US dollar erode, fall under pressure, take out this 108.09 area and get down towards the 107.5, 107 even area. So that's very, very likely to occur if we take out the low from yesterday. But right now, yesterday's low, and we're gonna move this over to here, now is set the tone. We have a nice 45-degree angle. We do have this buy signal that's still in place because we've fallen just short of our target area. So we'll see if strength prevails, but remember, we are viewing this as a corrective move. And oops, we can delete that one. Remember that we do have a trend in place. So we do have this downward resistance. So for us to fall short somewhere in this area and then consolidate, remember it was consolidating for months on end, I think it's very likely. So, but I think what's going to happen is this is going to become heavy resistance, and instead of having our range push up towards this area here, we're setting a new top, lowering the highs of the range and we're getting ready to set new lows. We have to see what goes on between the Ukraine and Russia. No matter what, even if they were to have a full ceasefire, pull out, withdrawal, whatever, it started tonight, you're talking about still months before the European economy is going to be able to turn around from the impact of the sanctions that actually hurt them just as much as they hurt Russia. You got to remember that German factories, especially Germany and a couple other countries in the EU, they have factories that one of their biggest export buyers, which would be the imports to the Russians, is Russia. Russia and China are a couple of the biggest consumers that buy European goods. So for them to put sanctions on Russia, that's hurting Russia, but it also means that now Germany and all these countries, their factories, which are coming out of lockdown and trying to produce products and sell them, cannot sell them to their buyers. And the world market's not going to take them because they already have sources. So that really puts this restriction on what's going on with them. All right, let's see. We got a question here. Cyrus Ayer, how do you determine your buy area? Okay, so the buy area, that's a pretty good question there. When it comes to a buy area or a sell area, I always start with the signal. So for instance, like this here, we had a buy signal. Let me move this out of that area. Right here, we had this buy signal right here that was on the 15th, okay? So this target range up here for the British pound, this here from 133.25 to 134.02 is our upside target area. This first level here is a 50% level. So if you go from here, or actually I think I did it from, yeah, it's from this high right here. Okay, so if you take this level here, you can see this is 50% on a Fibonacci level. Now, one thing is for sure, this 0.618 is also a Fibonacci number. Now, so just to let you know, 50% is a Gann number, it's a Fib number, it's also a common number used by traders for corrective moves. Okay, so it gives you an arbitrary target that if you are in a true correction that has decent momentum, that odds are the market will get close to. Now, it's not going to necessarily stop on a dime, but it should come close to that area. As you can see that it did fall just short, and then we actually had a short-term sell signal, but this was, remember, a corrective move higher in a bear trend. So that's where when you have a corrective move, it doesn't always hit up into that area. Sometimes it does. Now, if it is just a correction, the 0.618 puts that upper buffer, because that's where when you're looking at a corrective phase, it shouldn't go beyond 0.618. So if it goes into this area, this is where your area of most resistance should be found. Okay. Now, key question here is did this market just fall short, or is it still going to make another run up to the upside? So our key right now is that this low from March 15th, the market falls below this. Obviously, the buy signal is done. It didn't hit its target, came close. How you manage that's a totally different story. Read my book, you learn how to do that. This trade, actually, you would have already been out of the trade. You would have been stopped out with a small profit. But let's say you were holding on, or let's say you're bullish right now. Well, you could use where the market's trading right now. You know that this area right here is a great stop level, because if we fall through here, you're making lower move lows. Lower move lows after a lower move high confirms a downward trend, which means if you're buying, you're on the wrong side. But since this is viewed as a corrective move, selling into this rally, especially when you have a sell signal like we actually did have right here, this here was a sell signal, short-term sell signal. So this market, even it fell short, but then when it was confirmed with the sell signal, that already told us that, hey, it's time to get out of this long, because now we're getting a valid sell signal that's going with the trend. Okay, now let's try and figure out if this sell signal here is just a short-term sell or if it's going to be something that holds up in a big way. So, oops, I gotta do the reverse here. Okay, so we take this low and we go up to this high right here. Okay, so this gives us our numbers. So for our 50%, well, we fell through that one already yesterday. Not only did we fall through it, we settled below the 0.618. So we hit our target. If this is just a short-term wave down, then we found support, and you can see how today it's trying to bottom. This may be where we start to get another run at resistance, okay? So this sell signal has already been completed. You see how we had the 50% and the 0.618 as our target zone to set it up. This is already completed over the past week. We've fallen through it, with yesterday being the big day to take profit on it, okay? So this would have been a nice little trade here, okay? And now the question is are we just setting up for a sideways trade? Well, we don't really have, we know that the short-term sell signal has already been met. This also is a counter trend to this buy signal here. So if this market really is trying to turn, then we should find support and then make another run at resistance. And should we do that, we would be targeting obviously this high here, because we're coming off, remember, we're making higher, lower move high, lower move low, lower move high, lower move low, lower move high. Once again, this is why we were talking about this was a correction and should be viewed as it because of the trend. Then this goes with the trend. So it did hit its target, but the question is if the bear trend is going to continue, it should consolidate and then take out this low of 129.98. So if you're an aggressive bull, this would be a short little spot. You have a nice little area to have a high reward to risk ratio. If you're very bullish, if you think that we're going to turn around in this market, either the correction is not over to the upside or we're turning this market around, then you think about the risk here. We're trading at 131 even, basically down to 129.98, a few pips below that. You're looking at just over $1 to look to make, let's see, well, if we just went up into this target range and completed this original buy signal, you're looking at trading between 133.25 and 134.02. So if you're bullish right now, and I'm not telling you to buy this market, you have a good chance of extending this upside correction up into our original target zone, okay? Now, if the bearish momentum is truly in force, well, then we're going to be slamming new lows. You're going to get stopped out. But the good thing is you're not risking very much to make a lot. You have a 3-to-1 profit ratio mixed in there on that trade. Those are the kind of trades you want to look for. Especially like when it came to this sell signal here, you didn't have much into this trade, which makes me worry that this is only a short-term little thing here, because by the time you would have been able to put this on, you look at how much reward you had going versus your risk with the high, it's like 1-to-1. You don't take a 1-to-1 trade, okay? So this is how you find your areas, but then you got to use money management principles to make your decision. So one of the things I consult a lot of traders on is it's not that their buy and sell signals are bad. They have lots of good opportunities. The only problem is they overtrade. They take a lot of trades where it's why would you risk $1 to make $1? You have to be right, 7 out of 10 times at the very least just to break even, So and any string of losses becomes nigh impossible to overcome. So that's something that's very important. Read my book. There's a whole chapter on money management. All right, so we found some areas here. The question is what we're going to do. Well, because interest rates, which we looked at, are going lower by the market, meaning higher in price, that gives weakness to the U.S. dollar. Okay, so that's probably why you're seeing today where we had made this lower move low and we made a big bounce up. Right now, we're only slightly positive on the day. Remember that the interest rate market's already closed now. It's just the stock market left. And right now, I think because of the talks that are going on in Turkey, because of the Russian-Ukrainian thing, things with the European currencies right now are pretty neutral. We'll see what kind of news comes out. If things look very negative, then I would assume that you're going to see strength in the dollar, and also watch the interest rates. This is how you figure out where this market's going to go, all right? This is how you figure out direction. Right now, oil is pulling back, okay? So that's something that's calming things in the overall market, but only coming back $1. The fact that the interest rates are up a whole dollar, basis dollar, that's a big deal. But it's only a correction right now. Remember, rates are going up. We know that. The Fed just said they're going to be more aggressive than they were originally intending to do so. So that means the way that the bond market, the 30-year bond market, and the 10-year Treasury note, and all interest rates in the U.S. can go is lower in price. Lower in price is synonymous with higher rates. If rates are going higher, the price has to go lower. So that is just a fact. There's no now how it goes lower and at what rate. That's a totally different story. But that is something you can count on. It's impossible for the bond market to only be in a bull market when you're raising aggressively interest rates. It just doesn't happen. But because of the conflict, it is a flight to quality. So you will get good rallies. They are rallies to sell. Okay. So that's another thing that if the Bank of England comes out with another comment, which we already know they're leaning towards our side, it's not as aggressively. If they start to say that they're going to defend their currency because the pound is becoming too weak versus the dollar, just like the yen, the Japanese are saying the yen is becoming too weak versus the dollar, well then you might see a big bounce. And especially for the European currencies, remember that the pound, unlike the euro, that England has their sovereignty once again. Okay, so that's very, very key. You got to pay attention to that. Okay, this fact that they have their sovereignty means that they control their currency, they control their outcome, they control their future and their destiny. They don't have to kowtow to the EU. So that's a big, big deal. You got to pay attention to that. All right. Oh, thanks for that like on YouTube. Appreciate it. So very big. Okay, so we're going to move on now to the U.S. dollar Swiss. And for transparency's sake, just to let you know, I am currently short the U.S. dollar Swiss. I'll let you know which markets I'm in. I'm short the U.S. dollar Swiss. You guys know I've been riding the U.S. dollar yen for months. I actually got out of, I don't even have a single contract on. I got completely out yesterday after they pulled back. I'll show you where the market pulled back over $2, and I was like, okay, after that news and whatever, it's time to take the profits and look to buy into it later, and we'll cover that later. So size there, good question. We're going to show you how to find some more buy and sell areas. Okay, so we had the U.S. dollar Swiss where we had this 3-day sell signal that fell into our target zone. We are keying off of this low from 2 sessions back. Any failure from here confirms weakness, and this market is just a consolidating wide range trade. Overall, it seems like it's a very weak bull, slowly making higher move highs and lower move lows on a weekly and monthly basis, which it is. But as you can see, at any point on this market, it's basically been going sideways. It's being contained within a $4 range. So what could aggressively make this move to the upside? Well, if we see oil turn around and start to rally a lot, and if you see a sell-off in the 30-year bonds and the 10-year notes, because that means strength to the dollar because of interest rates and also because of oil. Remember that the EU does not have oil. British pound and the dollar, they don't care where oil goes because we're both oil producers. So, and the UK is an oil producer for the world, you know, so that negates that fundamental variable, but interest rates does not negate. Now, the Swiss, they don't have oil. They got to buy oil. So the fact that oil is down and the interest rates are up, meaning down in rate, that's giving weakness to the dollar, strength to the Swiss, and that's why we have the market falling off of falling back on support. So the question is did we set a short-term bottom, obviously. Now the question is after this low here, did we just set a lower move high, or are we chopping around looking for strength to then catapult us up towards higher move highs? I think that if you're an aggressive bull, definitely key off of the low from 2 sessions back. Anything below here is negative. One, because it falls through our target range, and especially if you see a rally continue in the 30-year bond market and a sell-off in oil, it's very, very likely that you're going to see the U.S. dollar Swiss fall back below our target range and come back towards this upward sloping support line that's holding the channel intact. I don't think you're going to get below here. I think that you could flirt with support more likely than resistance. Now, if we have a big turnaround in oil with a big rally, or a big rally in 30-year bonds, Treasury, and 10-year notes, I know you guys hear me talk about these all the time. Well, that's because they're fundamentals of knowing which way the price is going. So if that does happen, then look out, and we are going to challenge new highs. But if we explode a new high or explode through resistance and breach this last high over here, which is a higher move high, and should we go in that direction, that would confirm this is a higher move low, which means indicative of a bullish trend. So being long is the way to go, but your expectations need to be rational. Like if you're an aggressive buyer right now, buying it from here down towards around this previous low against this low right here is a low risk buy if you're looking for a challenge of resistance, because you'd be risking, let's see, 93.10 down to 92.61. You're only risking 50, a little over 55 pips just below this low to bring in, let's see, 93.02 to 94.61. To at least take out that and head up towards 95. I would say 95 even would be your next price target. Definitely 94.70 area, because we may just breach it a little bit. You can see that as we make new highs, we spike up to them and then we pull back. We don't necessarily become bearish, but corrections happen very, very fast. Now, another thing to remember is markets tend to go out like they come in. You see how we sparked this big rally, we pinnacled. Here we have this line right here. I can make this a little wider so you can see it better. The market has retreated back since then at pretty much the same velocity and a sell-off. See how it came? This was a top-end resistance area of the range. And we had a consolidation here. We just barely, boom, spiked through it, and we've closed above it when we've been trading above this cap here. So where resistance becomes support, we tried to poke in that range. We flew right out of it, hit our target. So we may have based here in the short run, and especially once again, I think that oil's in a correction, the interest rate market's in a correction, the dollar's in a correction. So if that's the case, that means we are finding support in the dollar, in the interest resistance in the interest rates, support in the oil market, and support in the dollar index, which then should turn around, and then boom, we'll see strength happen once again. So that's where we are with the Swiss. Let's double check here and see if we have any questions on YouTube. No, but we do have a no. We got 2 likes. Thank you very much. We do appreciate all of that. All right, and we got some good viewers on Twitch. All right, sounds good. All right, if you're not going to jump in on the chat, we'll move on to the U.S. dollar, Japanese yen. This is one, if you've been following me, you're long, or even, God forbid, you actually got long this one. Well, you know that I've been a bull looking at first we at 117 was a target. We blew through that. 122, if you listen to me on TFNN every Wednesday, or almost every Wednesday morning, and also on my videos, I've been calling for 122. I thought it was going to take a little bit longer. Like I figured it would be into April, by the time, like first week of April probably, that we would hit 122. And that was just because of the velocity of the rally that we've already had. Now remember how I said markets tend to go out like they come in. Yesterday could be the peak. We have 125.12 up there. Look at, we're trading 122.92. So you're looking at over a $2 slide from yesterday's high to where we are trading at right now. Okay, so yesterday, before it closed, I already started to take some profits, and then today a little bit lower, I liquidated my whole position. The reason I did that was because of the change in vernacular of the Bank of Japan. If you were listening at the beginning of this video, unless you just joined us, I would just want to let you know that the Bank of Japan said that if the yen hits 130, they will be raising rates. How much? We don't know. But they said they will not let their currency be devalued any more than 130. They said they will take aggressive action and do whatever they need to do to support their currency at 130 and bring it back into an area that they find more acceptable. So, that being said, it's going to be a very dicey trade moving forward to the long, to the upside. So I think what we need to do is let cooler heads prevail, and this is the perfect time for a correction. See, if you look at the yen, it was going sideways. It's been like basically like the Swiss, slowly getting through resistance and then boom, correcting. Not really trying. It was a rally, but just a grind. I mean, look at, we're going back to October, from 110 to 116 from October into February. That's how long it took to grind, and you had already gotten up to 115.5 back in November. And then chop, grind, we barely got through that high, it's breached resistance, and fall apart once again. Now we have a totally different story. With this velocity, markets tend to go out like they come in, so over the next few sessions into the next week, it's very likely that we'll come back towards this target range. Will we hit the 50% here at 119.79 or the 0.618 at 118.48? I don't know. I think somewhere in this range is where we'll find it. You can see this line here. This is pretty much a 45. If you maintain the 45-degree trend line, that typically is a solid trend. So this falls in line with our support area. with the velocity of this rally and the news, it wouldn't. It's kind of like you're letting the wind out of a balloon. You know, when you're a kid and you blow a balloon up and you don't tie off the end, and then you let it go and it starts to fly around. Well, you know, initially you had all this boom, boom. You're blowing in, expanding. It's getting bigger and bigger and bigger. Well, now you're starting to let the air out, and as it does, well, it goes out pretty quickly and shrinks up really fast, and before it starts to slow down and kind of, you know, get into just a glide, if you've ever done that with a balloon as a kid. Markets are the same thing. The balloon is now letting out air. It should come down at a very, look at how the low of today already almost took out the low of yesterday. That's quite significant from the way we opened up on Sunday, exploded with all this force, you know, but then we also have the pullback in interest rates and also a big drop in oil over the past few sessions, both of which turn off the strength on the dollar and also relieve the weakness of the yen. Now, the interest rate equation will no longer be in play if they start to talk more about raising rates, and especially if they start to say, hey, we're going to, no matter what, do something even before it gets to 130. So that means the efficacy of our interest rate raising versus they're doing absolutely nothing is null and void. We have a new environment, which means that you're going to probably see a big adjusting of positions. I would expect a lot of volatility, and I would expect a lot of buying to come in between 120 down into this area, just because until they do raise rates, and unless oil really starts to collapse, which I don't see that happening anytime soon, we should see another bounce and at least a challenge of resistance. Now, could we fall short? I don't know. It's very possible. Anything can happen. But remember, we're coming off of higher move highs, higher move lows, and a big explosive higher move high. We should start to see a pullback to a higher move low, at least for a correction. I would be very leery, though, trying to get short any long-term play with the U.S. dollar yen. Only if we'll talk about that once we have news that would warrant such a type of stance. All right, Australian dollar, U.S. dollar. So once again, for compliance and for transparency, yes, I am short the U.S. dollar Swiss. I am no longer long the U.S. dollar yen, which I've been long for months. I have liquidated my position completely. I am looking for a break to buy. You already know the area where I'm looking for. So now, unless the only thing that would change that, where I would jump in on the yen, by the way, is if you see a big break, meaning slide in the 30-year Treasury note and a 10-year bond, and a big rally in oil. Well, then it's fundamentally until the Japanese and the Bank of Japan pull the trigger or do something with their government to support their currency. You have to be long then, it's because the trend is your friend, and that's the trade, you know. So, and since I got out near the top, you know, I'm $2, $1.50 to $2 off that explosive high from yesterday, and I've been long since, you know, last summer, well, basically last spring, and then nibbling and adding back more as every time they've had a break. So you know that December or November, from Thanksgiving all the way up until 2 weeks ago, I was sitting going nowhere on this trade. So I'm very happy with where it's at. All right, Australian dollar, U.S. dollar made a higher move high yesterday. Today you can see it's strong. The question is it going to correct or is it not going to correct? Very dicey. The interest rate pullback in the bonds is giving strength to the Aussie right now. The U.S. dollar, like I said, is in a corrective phase right now, so it's helping to give some momentum to Aussie strength. The question is this bull going to stay? Well, I think it's hard to fade the Australian dollar, U.S. dollar right now. I would look to buy dips. I would not sell into strength right now unless you got a very, very strong sell signal. Like right now, if you wanted to be an aggressive short, you could sell the market right here at 75.15 against the 75.44 area. So I would say up to 75.5 as a stop, because if we take out yesterday's high, well, higher move highs after higher move lows is a bull trend. So if you're short, you're on the wrong end of that trade. So, but if this market is turning or at least going neutral for a while, let's say the short-term high is in, which is very possible, then you could see a possible slide back down towards the 73.56 to 73.09. So if you think about your bang for your buck as a short trade, that would be very good. Hey, we got a first-time viewer here. Can you do GBP JPY? Absolutely. Let me finish up the Australian US dollar. And that's a great one because since we covered the pound and we covered the yen already, I'll show you how the best indicator ever is using the markets because it's always in real time. And I'll show you how you trade the British pound Japanese cross because of what the other two are doing. All right, so we have our buy zone here. Should we come down in this area, we have an upward sloping support line. I think that will hold this trend intact because of commodity pricing and a whole bunch in China starting to come back online and buy more stuff from Australia, because Australia is now working. You can't, when you're not mining and transporting stuff to your ports, you can't send it out to your buyers, which China is their biggest customer. So with the rally in the CRB index, meaning oil and all kinds of precious minerals and precious metals and stuff like that, it's very hard to see the Australian dollar not remain in a bullish trend for at least the next few months, especially as as inflation keeps on rearing its head. Right now, I could see where you might get a short-term correction, especially if oil does retreat some more. And now here's the thing is, you would have to see oil go down and then interest rates go up, meaning the bond market go down. So remember how we were saying, you know, the bond market goes up and oil goes up for some currencies. It's different with other currencies depending on the relationship. So they don't all go in tandem. Just because interest rates are going up in the U.S. doesn't mean that it's strong versus every other currency. And also the same with oil. Remember that oil is not the biggest variable because Australia produces oil. so that's where the oil doesn't come into play. All right, so let's move on to our GBP JPY. So since we're going to talk about the British pound JPY, let's remind ourselves what's going on with the British pound US dollar. So British pound US dollar set a new low, but it's strong today. So just remember, pound stronger versus the dollar right now. Okay? Then we go to US dollar JPY. The US dollar is down versus the yen. So the JPY is strong versus the dollar. So of the two, GBP and JPY, those are both strong versus the dollar. Now, the thing is, the JPY is stronger versus the dollar than the pound is. So let's see what is going on with the British pound JPY. Well, that would mean that we should be going down today in the pound versus the JPY. So just like how we had this spike run up in the US dollar yen, and now things are looks like we got a little bit of a thing consolidating here. I was telling people yesterday in our video, watch out for a short-term top. And today, especially if this market settles lower sometime this afternoon, we already have a sell signal forming here today. Okay. Now here's the thing: is if let's say both the pound and the yen continue their correction versus the dollar, the thing is that the yen has corrected more versus the dollar off of its high. Okay, meaning the low in the yen, versus the pound, which is just barely coming off of its low. Okay, so that means that in the British pound JPY cross, you're going to have more pressure on the pound, meaning that even though it's in a bull market right now, it's correcting to the downside. This is also one way you can use the markets as an indicator to see if you're on the right side of a trend or a short-term correction, because this coincides with everything we're looking for. So if our first scenario of the British pound JPY shows us that there's a good chance that you'll see another run at resistance versus the dollar, okay, that means that the pound is strong versus the dollar, okay, but if you see the yen continue to slide, especially as strongly as it has over the past couple days, that means that it is much stronger against the dollar than the pound. So that means that relatively speaking, if you use as a dollar as your base, the pound is not as strong as the yen in the short run. So that means that you should see more selling pressure, meaning the market should continue to hit support in the pound JPY. And we already have from this high our 157.76, which is our 50% retracement, and at 156.08 is our 0.618 Fibonacci retracement. Notice how the 50% comes right on top of these highs here. Remember, where you had resistance, it becomes support. So it's a good target area. Also our 0.618, look at this. It is basically the buffer here of where these markets have been finding support for months. Or they were to pinnacle pivot where then it dipped down, but then it came back up, and it's almost like a sine wave in mass. See how equal these waves are? It was a range trader's delight and a trend trader's nightmare. But now we have definitely a short-term correction that we can base on this one because of what we learned from the other markets. We have this set up where now our price targets are fantastic. This means they're harmonically in line, Fibonacci in line, which when you have this kind of thing, does it hit to the tick or the pip? Not necessarily, but it is usually a good sign that you're on the right side of the market. And right now, if you look at where you're at, we're due for a correction. Remember, if markets go out like they go in, like it's very odd for a market to have like the velocity of this kind of a rally, okay, and then all of a sudden go sideways. That just doesn't happen. It can happen. Like you can see this market goes chopping, but it typically doesn't happen until you've gone up like this, come to an area like this, and then go sideways. It's rare that you can see like here, rallied up strong, we tried to go sideways, boom, you got to have a wave down. Okay, try to breach resistance, sideways, boom, you got to have a wave down. Like you just don't hold the breaks, you don't plateau a top or a bottom like that. So, or you can, but the odds of it are very, very slim, very, very rare. So great question there, Spookstride, or excuse me, I'm sorry, George Villegas 22. Okay, sorry, trying to read this from halfway across my desk here. So very good question. Really appreciate that, guys, especially for the new follower and viewer. Really appreciate that as well. All right, Spookstride. Hi, I'm a new follower, and I want to say thank you for your knowledge. Hey, you know what? You are welcome, my friend. That's what I'm here for, is to pass on my knowledge to you guys and try and keep you on the right side of the market, so, and show you the difference between what all the millionaire gurus out there that say you can make $1 billion in a day versus what the reality of things are. So glad that you're learning. All right, so let's get back on track to our walk around the world. We're going to go to New Zealand dollar, US dollar. Now remember, New Zealand dollar and Australian dollar often, not always, but often do trend together. Now the amount of velocity and of the rallies and breaks are usually typically pretty different. If you've been listening to our videos, you heard me say recently that while they are trading in tandem and both of them are in a short-term bull market versus the dollar, don't expect New Zealand dollar to pierce through resistance as the Australian dollar. One of the main reasons for this is a geopolitical factor that as they come out of the lockdowns, they were very severe, just like Australia was. However, they are still maintaining a lot of restrictions from COVID. They are the last holdout of major, major restrictions. As far as I know, they still have and this was enacted a few months ago, that if, say, you test positive and someone is contact traced, whether they test positive or negative, they still have to remain in quarantine for 20-something days. That doesn't work in an economy, especially as the world's coming back together. So now today, interestingly enough, we have quite the buy signal, short-term buy signal going on here that goes with the trend. We'll see what happens. We had made higher move highs here. We did not have a sell signal, but I did have a corrective area here. We fell short of that, and now we have a lot of strength and momentum on our side, especially because it's in tandem with the Aussie dollar. Now, just as I said, to the upside, don't expect it to blow through resistance and just scream up to higher levels. You're more likely to see, just like here, these retracements here, even like here where we pulled back. Even yesterday, radical sell-off, boom, like a balloon underwater. We're recouping it today, neutralizing thing. But after today, I would expect you to creep higher and get through resistance and then have another slide off. So we are making higher move highs and higher move lows. We didn't try and call a top. All I said over the past couple of sessions, if the short-term top holds, and using these highs as your risk, as an aggressive bear, this would be a rational short-term sell signal. It comes in line with this upward sloping support line. The slope of this rally is pretty steep, so I think you have to use caution as far as with the volatility with this. So I would look for breaks to buy, and I would use a lot of caution selling. Now, if you're an aggressive seller right now, you don't have any real good risk reward here, because even if we do have harsher sell-offs, we're coming into a strong support area. So if you were to risk these highs here, you're basically at a 2-to-1 ratio, but you're taking a counter trend trade, so the odds are against you. If you were at least taking a trend trade, meaning bullish, then I would say that's a good idea. Like today, If you're an aggressive bull and you're not long, I would say you could key off of the low from today, looking for a breach of new highs. But then if I'm true and if I'm right on the fact that the momentum is going to stall as we pierce through resistance, you're looking at, again, a 1-to-1, barely 2-to-1 trade. So I would wait for a good significant pullback before you buy into this market, or definitely wait for a very valid buy signal for that, okay? So just be mindful of that one. It's a little tricky with the New Zealand dollar, US dollar, like I said, because of they're holding the position on the COVID mandate still. All right, US dollar, Canada. Now, oops, why did that not go? All right, US dollar, Canada. Let's try this again. And for transparency's sake, just to let you know, I shorted the US dollar, Canada today because of an intraday sell signal on the hourly and what have you. So it's an aggressive little trade. We'll see it. And sometimes selling into new lows is not a bad idea, especially because if we do take out support here, I don't think that we're just going to grind through support. We are either basing, and I'm wrong, so I have the risk of yesterday's high as my risk from I basically got short just a couple pips above where we're at right now. I'm only a couple pips up in this trade, not much. But I do believe that should we take out this low, we're not just going from 124.62 down to like 124 half or 124 even. I could see this market going down to 122 to even 121 over the course of the next few weeks to couple months. So this is an aggressive short for me. Right now, the trend is lower, making lower move lows and lower move highs. Momentum is on my side. The only problem is markets tend to go out like they come in. So if this market has bottomed right here, which I don't think it has, I think the way it's reacted with this, I mean, it made a lower move high yesterday, and then boom, came back and made a lower move low, not on a daily, but on an intraday basis. So the hourly is still coincided with the major daily trend, weekly trend, and monthly trend, which is now bearish. So right now, I'm not in a counter trend trade, and like I said, I have a big risk here. If it does come up into here, this is where you found support. Support usually becomes resistance. If we don't get up into this area, well then, especially over the next couple sessions, I would say, boom, this is on a good side. We're going to look to pressure support. Another thing is, while the interest rate market is rallying, that's a key thing because oil is off the trade for this one because Canada and US both produce oil. But the interest rate trade right now, as long as the bond market is rallying, which is going counter direction to the way that we know the Fed is going as far as raising rates. Remember, interest rates go up in price, then that means that the rate goes down in value, okay? And then when bond prices go down, or 10-year interest rate prices go down in price, that's when interest rates go up. There's an inverse relationship. So as long as we have a corrective move going on in the bond market, I think it's very safe for me to be short on this one. So that's a technical trade which comes in with a lot of fundamentals and integrating other markets. I would do, like I said at the beginning with this disclaimer, this is just for educational purposes only. Learn how to integrate these things into your trading, but don't just react because I'm telling you about this. The trade's already on. Never try and chase a trade, that's for sure. So, but we give you signals. We gave you this sell signal back up here. So if you go back to our videos, that was a nice one. It definitely hit our target area and then some because we made a higher move high, we made a lower move low. So that definitely sets us up for big neutral unless we take out this low here because then we have a weekly and monthly change which confirms a bearish trend. All right, let's see if we got any questions on YouTube. No, but we do have another like. Thank you, appreciate that. We passed that out on LinkedIn. We got you out there on Facebook. Okay, a little value from that one. Let's see, and on Twitch. All right, cool. So we'll go on now and take a look at some cryptos real quick. We were talking about the rally in Bitcoin. We did not make a higher move high today. Remember, I said that most likely Bitcoin is rallying because of Ethereum. Now, if you watch my videos over the past couple months, let alone years, I've been tracking crypto since it started and been in my own little way in that world differently than most. I've take the Levi Strauss approach. I only own a little bit of crypto here and there, but I've made money on crypto because of setting up miners and some technology stuff. So that's the way I look at that. I'm up on the cryptocurrency market. It's all house money. So whether I make a lot more or don't make anything anymore off of it, I've already gotten paid. But Bitcoin's like the dollar index, is the way I look at it. Even it's not, but it acts kind of like that. So usually the question is the dog wagging the tail or is the tail wagging the dog? Well, in this case, I think Ethereum is the one that drove this breakout and is helping Bitcoin out. I truly think that when it comes to this current move, I would use caution, thinking that it's going to be a big bullish breakout. This could be a trap. So right now, I'm more bullish Ethereum because of the technology and the way it's expanding and growing. There's also some issues though where I don't see Ethereum maintaining the rally that it has. Now, as you can see, Ethereum made a higher move high today, so they're both trending in tandem. However, we have a little divergence. So divergence right here tells us that we may be topping on this Ethereum move. Now, obviously, we've made higher move highs and higher move lows. The velocity of this trend is pretty steep. We took out this key high right here and have settled above it now for 2 sessions and maybe possibly today. I would use caution. Where we are at right now, we may start to run into some serious resistance. So let's take this last big high up here, and we'll go down to this low right here. And oh, look at what we have going on right here. So, for those of you that know, I like to use Fibonacci, the 50%, because it's also a Gann number, and it's also a normal trading target. And then we throw in the 0.618. All right, so now let's draw this back to here. So today, we are just brushing up against our target zone. For if this is a corrective move, somewhere between the high of today and 3,785 is where this market should start to run out of gas. Now, especially since we poked through that 50% today, and you have Bitcoin not making a higher move high, any turn on support in both of these two that starts to touch off some selling, I think would set off a big correction. Now, do I think you're going to go and make major lows on this chart? No, but I do think that this is a corrective move right now, and until you confirm it not being a corrective move, you have to view it as such. And if it is a corrective move, odds are very likely that somewhere between the high of today, right now, and up in this area is where you're going to see the market turn and start to fall on support. And then I would say, let's see if it holds up above 3,000. Because if it falls below this 3,040 area, that confirms that this is just a spike up, and then we're just widening out the range trade. Overall, yes, we are coming off a major lower move low, a lower move high, a higher move low. Then we had a lower move high, a higher move low, confirming consolidation. We break out to the upside with a higher move high. So that means what? Right now we are in a neutral, somewhat bullish trend. So that's key to being mindful of where you're going. Now, does this mean that the market hasn't turned and it doesn't explode to $50,000? Anything can happen, okay? But on a rational market movement, one should expect that these things are most likely going to occur, okay? So real quick, we're going to do a jump around the board again. So by the way, I am long Bitcoin and Ethereum, so and I am looking to get out of some Ethereum once if it does get a nice pop up, a couple more hundreds of dollars. Without a doubt, I'm taking some more money off the table. It could go screaming higher, and maybe I'm wrong, but no matter what, it's more cash, and I'll take the cash right now. So Euro US dollar is trading a little bit higher than when we started this video. So once again, helping to confirm our strength. Remember that the interest rates, they settled. Let's see, where were they? They ended up settling down $1.12. That's big. That's a whole basis point plus almost a half. Remember, if you don't know it, 30-year and 10-year futures, there's 32 ticks per buck. Okay, so that means this rallied 32 plus 12. That's 44 ticks today. That's a big. Well, today in this world is no longer such a big move. Years ago, it was a monstrous move, especially with no news. But this is helping to put pressure on rates, meaning they're going down because the price is going up. Okay, which is taking also some strength away from the U.S. dollar. helping the euro edge higher. So right now, especially where we're at, if we edge higher, remember we are coming up into some heavy resistance. Don't expect a lot of follow through, okay? Just because if we see a turn in the 30-year and God forbid you see a big rally in oil, and then there's the Ukrainian-Russian thing that definitely has a big weight on the euro and the Swiss. Not so much the pound, just because the pound has, UK has all the energy they need. They don't care. So it's not a big deal for them. So, and the interest rate environment, obviously we know that they're more on par with us than the euro is. Remember, because the EU is still doing quantitative easing, which is the same thing as cutting rates. They can't cut rates anymore, but they can continue to support the Bund and the Babel. And as long as they do that, that also helps to support the dollar. And the question is will the EU start to view their currency falling like the yen? I think they got a lot more to fall before they're going to do that, because remember, we're still $8 above parity. Granted, we've been above parity with the euro for a long time, but especially right now with what's going on in the globe, how can you view the euro as being as strong as it is? I think it should definitely be back down towards the 107 to 106 half, even 105 even area right now, until they change their stance. So for transparency's sake, okay, remember that I am out of the US dollar yen for those of you that are on that trend. Remember, I'm still watching out some key fundamentals and will be probably jumping back in or looking for a break to buy. Right now I'm short the US dollar Canada with a tight stop, short the US dollar Swiss with another tight stop. I'm actually up a couple ticks in both of those. So I have, if the market comes back, I'm either making a couple pips, not ticks because it's the currency market, not the futures market, and then that'll be that. Or I got a nice little lead on a extended trade that'll go into tomorrow. So things to look forward to before we end this video real quick. For those of you that are still with us, pay attention tomorrow to what happens with the oil numbers. Remember, every Wednesday they come out with oil stocks and what have you and things like that. You definitely need to pay attention to that. You can also find me on tfnn.com at 8:40 Central Standard Time tomorrow. I am on their station almost every Wednesday on the Tommy O'Brien Show. So, and we talk about currencies and futures. And if you go back and look at me on over the past couple of years, I called for $100 oil, over a year ago. So, especially once the mandate came down on the inauguration day. So that was a no-brainer. So as well as I've been long the US dollar yen since last summer, giving you all the reasons why, and now I'm trying to help guide you away from not taking profits or hanging on to a rally that you should probably take some profits in and look to manage more intently because of the speak that is coming around the world. And once again, also remember when we talked about the US dollar yen, I reminded you that the Bank of Japan does not act willy-nilly, and they don't just come out doing things haphazardly or often. So the fact that they made a big statement very clearly that if the yen gets to 130, it will not get above that without them not raising rates. And that means like instantly, like the day that hits, there's not going to be like a committee or whatever. You will see the Bank of Japan and the Japanese government do things to support their currency. What other things would that be? Well, obviously, it would be probably, besides raising rates, they would have some shifting on their balance sheets, especially on what currencies they hold, and also even some of their debt transactions and ownership of stuff in the U.S. So I wouldn't even doubt that you start to see a big dumping of Japanese investments in the U.S. just because of if they start to defend their dollar, now's the time to cash out, especially before while the bond market's still high, sell out. While the stock market's still high, sell out. Go to cash no matter what. Don't take that risk of market risk with what's going on in the rest of the world right now, which is not a bad plan. So that's something that also could impact our stock market greatly, as well as other countries starting to divest themselves of out of the U.S. So right now, we could be seeing a peak in the dollar, but not until that stuff happens. Once that does happen, well, then I would expect not necessarily that the dollar is going to become a long-term bear, but we will become a short-term bear. All right, let's see. One last question here. Do you also use news to trade? And if you do, how do you use them and what way can you trade? That is a great question, Spookstride. Okay, yes, I do use the news, but I usually trade against the news. Buy the rumor, sell the fact is something I've been a believer of since I learned it on the floor, and it doesn't mean that you necessarily buy the rumor and sell the fact. Yeah, sometimes you sell the rumor and buy the fact. So, but you have to know how to manage that one too. But the reality is that if you're hearing it on the news, it's already late. Especially when it comes to CNBC. You'll see stuff that happened overnight at 2 o'clock in the morning Chicago time, when the euro and the European markets are opening and stuff that happens, and then hours later, breaking news has happened, over in Europe, and you'll see that breaking news at 2 o'clock in the afternoon still in the U.S. So the question is, what news do you watch? Economic numbers. So if you want to know what do I trade for news, it's not CNBC, it's not MSNBC, it's not what any other pundits say or anything like that. The news of yesterday, when the Bank of Japan came out changing a long-term stance and aggressively saying that they are going to do something if something does occur at a certain level, that told me to change how I am managing my position. So yes, do I use the news? Yes, I took profits because of what the Japanese government did yesterday. If the Bank of Japan did not do what they did yesterday, then, especially with what the Fed said yesterday and today, as far as how much more aggressively they're going to raise rates, I would still be long the US dollar yen position. However, once again, because of that new news, while the other currencies around the world may be impacted because they haven't changed their central bank policies, this one is. Another thing I trade is, say, unemployment and what have you. So now there's times like Fed meetings where if I'm not in a position, I don't get into a position. That's news that there's too much noise, the algos go crazy, and you really got to stay away from that. Options are a great way to trade the news with futures options or stock options. You can use them on ETFs, especially currency ETFs. So there are ways to trade options in the Forex market. But those are more meant for volatility and other news plays. If you talk about CPI, PPI, unemployment, and Philadelphia Fed, what have you, things like that, those are the numbers that I do trade. Now, just because the number goes up or goes down, you can't just remember, economics is all theory. If it was law and it all worked, and if economics actually worked, you would be able to just use supply and demand shifters, and every time the news came out this or a number came out this, you would either buy or sell the market 100% of the time because of what it did. If you followed economic theory and did that, you would be a loser and never make money. Just telling you right now. Every once in a while you would hit a winning trade, but you would only make probably one to two out of every 20 trades. And I'm not being facetious on that by any means. So that's the difference between finance and economics. Finance actually participates. Economists just pretend to think they know what's going on. So, but that's where we are with the news. Okay, so yeah, stay away from seeing here's a key example. When I started out with this, I told you this is for educational purposes. If you look at our videos, as signals have occurred, you go back to them and be like, oh yeah, he called this signal. He said it would gravitate towards this way, or it failed. You can see whether I was right or whether I was wrong. Okay, so but what I don't do is give you pump and dump. Like for instance, there's a certain very flamboyant. Supposedly, some people find him humorous, market genius on CNBC, who has his own show after the markets, who will always give you his 3-4 picks of the day. Well, definitely for years, you could see how they were front-running those picks, or somebody was and knew, because stocks that only had $5 range, or they would have $5 ranges in the last hour or two of trading when they didn't move $5 in months. And then you would see them skyrocket up for a day or two and then collapse, or something very similar to that. So that's why I would say be careful of the news, be careful of those kinds of things. And then even economic numbers, remember, those get adjusted all the time. That's why economic theory totally doesn't work either, because the numbers at the time, you don't even know what's the true value. When they come out that there's a degree of error, the question is to what degree of error. Like here's one that you have to watch out for: unemployment, claims and unemployment. There's a dilemma with that model. all of a sudden we're supposedly having record, or not record low unemployment, but very low unemployment and what have you, and low unemployment claims. They said lowest claims since 1969. Well, yeah, there's a problem with that. A lot of people can't claim unemployment anymore. Doesn't mean that your unemployment rate is running at 3 point whatever percent that they say it is, because how is it possible that we have over 1 million more jobs available now than during the height of the pandemic when people were unemployment than we do now? That makes no sense. If all these people went back to work, then how do we still have 1 million more that we didn't create 11 million jobs between now and last year? That's impossible, especially, I don't know where you live, but in Chicago, they're closing restaurants and small businesses everywhere. Storefronts in strip malls everywhere are becoming more and more vacant. It reminds me of 2008. So for those of you that are old enough or lived in a city, urban area during 2008, when you saw all those businesses being shuttered and all those strip malls with for lease or even buy the property, yeah, it's coming back in a big way, and good luck with that as interest rates go up. It's a great question, Spookstride. Really appreciate all of your participation today from all of you guys, and for you guys hanging on as well. So, and before we get off, I just want to pull up one last thing for you and remind you that if you haven't done so, please subscribe to our YouTube channel or our Twitch channel, Forex Trading Unlocked, and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. You don't have to just necessarily follow my methodology. You can incorporate these signals into your own trading system and what have you. Use mine as a base of comparison. If there's anything you do, to read the book and get the money management chapter read. That is the most important one out there. Okay, so I have talked to people in the industry, even economists who I always disagree with, have said that that one chapter is worth multiple courses in college, and even in the trading sector, that most people have only know little pieces of it and should mostly fail at trying to stick to holding those pieces true, because they are things that you have to pay attention to. Because if money management is truly the key between being a successful trader or investor or becoming a failure, which more people fail, and the biggest reason they fail is not just because they don't have a plan or they don't have a good signal, it's because their money management is horrible. And you hear a lot of people are like, you know what, if I would have managed my position better this way and this way, I would still have money, and I would have caught this opportunity, and I wouldn't be down money, I'd be up money. Well, that's over and over you hear that, and the one thing that rings clear in my head always is, yeah, you said the thing, money management. When you're truthful, you figure it out, and then you can change that. So stop making stupid mistakes, learn to do the right thing, and keep the odds in your favor, and don't waste your time. So thank you very much for your time today. I'm Teddy Keckstedt from Forex Trading Unlocked. Check us out at Forex-Trading.